In this section, we're going to be looking at the different types of bear trade setups. These are setups that you will see time and time again on all kinds of time frames, and they are setups that can help us put the odds in our favor when we're making these entries. We're going to be looking at top fishing. You've certainly heard us talking about bottom fishing plays at this point, looking for oversold bounces. Well, top fishing plays are the exact opposite, and we'll look at an example of that. We're going to look at loss of support. That's the most standard bearish entry when you're in an uptrend of higher lows and higher highs, and you see that shift and you start forming lower highs and lower lows. That is the loss of support. A bear equilibrium break. We know equilibrium breaks or equilibrium patterns form all over the place. Bull breaks are bull signals, and the bear breaks are signals for the bears to enter into a position. And we got the short within an equilibrium. So that's the kind of scenario when the equilibrium is forming and the range is wide enough between the highs and lows that there are trades to be had while still within the equilibrium pattern before it actually breaks. So let's start it off with top fishing and check out some of these patterns in real life. Top fishing plays are some of my favorite bearish entry plays to make for a number of reasons. Number one, you have a clear stop loss level to be using, and it allows you to keep the risk to reward scenario certainly in your favor and keep that risk really small. Number two is there's many different setups that can occur, and the details within that setup can tell you whether or not it's likely to have follow through on that play. So here's just a brief example on Bitcoin on the daily time frame where we had the top of our bounce. We hit 11,775, and this is back in February. We pulled back and formed our higher low, and then the bulls came right up to resistance and rejected, and we could not break that level. So this was a top fishing play where if we made a bearish entry on this bearish reversal candlestick and put a stop loss if 11,775 breaks, that's where you get triggered out. So let's say you entered at the end of the day on this bearish reversal candlestick at $11,339. You're essentially risking a $420 move of where you would get stopped out if the bulls see continuation. And in terms of the reward potential, obviously we ended up pulling back very significantly, thousands of dollars. So the risk to reward ended up being, 5-to-1 reward for potential risk. So again, in this scenario, the things that I would be looking at are a number of different indicators. The first one is volume. We are not seeing increasing bull volume on this move back to test resistance. So that tells me that we do not have the significant bull momentum. And like that example I always talk about, the acceleration of the car heading into the roadblock is not accelerating if the volume is not increasing. So that was red flag number one for the bulls. Another notable red flag would be the amount of ground that the bulls had to cover to get back to this resistance level. So we pulled back, and it would be a different scenario if we stair-stepped our way up and consolidated multiple times, but we kind of made a straight shot with very brief consolidation, and again, that tired the bulls out right when they came to critical resistance, and then after that bearish reversal candlestick, we saw a lot of FUD news come out, perfect timing for the bears, and knock the price all the way back down. So with regards to that scenario of the bulls needing to cover a certain amount of ground to make the bull break, that favors the bears in the sense that the bulls use up their buying power before getting to key resistance. If we look back here at this initial consolidation on the first bounce that we saw, we had the top resistance. This is a bearish reversal spinning top candlestick. So maybe someone was looking for a top fishing play there. And again, it's very important to always have a resistance level that you are making a top fishing play with. So if it's at the top of the move and there's not a clear resistance level yet, you don't have anything to be going off of to be your exit point. You want your exit point to essentially be the bulls proving that they have continuation power, like they would have proven here had we broken 11,775. So on this initial pullback, bearish reversal candlestick, 1 day of pullback, and that's not a lot of ground that the bulls have to make up to see continuation. You can see one green day made back most of that pullback, and then we just saw continuation very quickly. Whereas here, it was more significant of a pullback, so the odds of the bulls being able to break to a higher high on this move after pretty much a week of green in a row is not likely, again, because the bulls used up their buying power to cover that much more ground. So this is a top fishing play, a clear resistance level, a clear stop level to put right behind it. The odds of you getting stopped out are fairly high in the sense that you are going against momentum. But again, it's the low risk of this trade with a proper stop loss in place that has it pay off more times than not. And with bottom fishing and top fishing plays, the risk to reward is in your favor to a point where you could get stopped out either too out of 3 or 3 out of 4 trades, and that one that ends up being a positive trade for you can easily make up the losses of those other small stop outs. So again, the exact opposite of a bottom fishing play. Rather than playing off of a key support on a bounce, we are playing off of a key resistance and looking for a rejection. For this trade setup, we're going to be looking at just a standard old loss of support to indicate a bearish entry. So just like a break of resistance is a bullish entry signal, it's the complete opposite. A break of support is a bearish entry signal. Oftentimes, if the support level is very clear, that bearish break will give a scenario where not only do you have stop losses from bulls triggering, but you have bears entering the trade at the same time. So often you will get yourself in a position where you are profitable in that trade almost instantly, and that's the ideal scenario because you can then either set your stop loss at break even or put it to a point where it would be a protective, just a small loss. So here's an example of Ethereum on the daily time frame back from February, where we saw the dump, we bounced, we formed a little higher low here. So our initial higher low of support on the daily was at 780. We saw continuation. We pulled back and we held 786.59. So it's a higher low by $6.59, keeping those bulls in control. But we're in a scenario right now where if 786 and 780 break, there's a lack of support immediately afterwards because it was coming right after an oversold bounce. So if 780 breaks, it's a very clear bear signal due to the lack of support and due to the fact that it held 2 attempts. Another pattern to be watching for the breaks of supports for bearish entries is the bearish reversal head and shoulder pattern. And essentially all that is happening with the psychology of that pattern is going from higher lows and higher highs to then a lower high and a lower low. So the confirmation of the reversal pattern is when the neckline breaks, because that means the higher lows are breaking. I like the necklines to be horizontal with each other, or for the right side to be higher than the left side. Again, because fundamentally what is going on is a shift from higher lows and higher highs to lower highs and lower lows. So if this were a head and shoulders pattern, it would be the left shoulder, the head, the right shoulder, and the confirmation would be this break of 786 to lose the daily higher low pattern and put the bears in control. So let's see how it played out. Let's get rid of this pattern. We can see each candlestick representing a day, lack of follow through from the bulls. We're coming down to test support. We break support. There's a volume spike because stop losses are triggering and bears are entering. We see a bounce attempt, no confirmation, little follow through. Now we're just trading sideways as the bulls try and recover. And then we have continuation to the downside and just a really nice bear follow through as soon as that support level broke. And we top it off with one more big down day. And all in all, huge profit opportunity on the break of 780. The price dropped down to 450 a couple weeks later. So that's the kind of position where you can certainly let that trade ride a little bit, because we never even got back to breaking 780. If you entered on a break of 780 and put your stop loss at break even, you would not have triggered out of this trade and you would have been able to ride it down for a bit of a swing trade. So that's an example of a bearish reversal head and shoulders pattern with a clear support level, a lack of support immediately behind it that broke and followed through. Let's now look at Litecoin in the here and now on the 4-hour time frame, because it's a potential setup that is similar, but it didn't get the follow through just yet. So it would be left shoulder, head, right shoulder, and here we would be looking at the neckline of support. And this neckline of support would go right here. So I see the left neckline is 155.56. The right neckline is 157.06. So holding it by about $1.50. And then here again, we still have an incremental higher high. We did not break, or I should say a higher low, excuse me. We did not break the neckline. So the bulls are still holding on to this trend and they're trying to make their way back up in this tightening range. So we do not have confirmation of this bearish signal unless we lose the higher low pattern, which would be a clear break of support and a bear entry signal. So these are a couple setups on where losing support would be a clear bearish entry signal.